Hello Dairy Today viewers. On behalf of the Market 360 Advisory Team here at Stewart Peterson, I'm Tom Mongovin, and this is your weekend review for the week of July 20th, 2012. Taking a look at our CME dairy components, first taking a look at the block and barrel for cheese. Block settled at 1.7175, up just about 4 cents this week. Barrels also up this week, a penny and a half, settling at 169.5. Butter also higher this week, settling at 159, and the powders for whey and non-fat dry milk were down this week. Taking a look at your milk closes from Friday afternoon, July and August settled the week lower, while September through December finished higher as we did rally on Friday. July down 6 cents to $16.67, August settling down 26 cents, just under $18, and September through December up anywhere between 26 and 44 cents on the week. Taking a look at that block barrel average on a weekly chart, where each one of these bars represents a week's worth of trading, it is clear that the trend is still bullish as prices continue to move higher. The block barrel average was up another 2.5 cents this week to close out at just under 171. However, this does represent one of the few bearish items we are seeing in the market right now. At this price, we run the risk of pricing ourselves out of the export market as Oceania is still holding steady at 163. This could cut into demand and ultimately lead to a cheese price correction. Here's the August milk chart, and as you can see, similar to cheese, there is some strong trendline support going all the way back to April of this year. The trendline will continue to act as support in the short term. As you can see, prices have tested this support line several times so far this year, but each time we've tested that support line, we have rallied higher. The milk production report for June came out this week, and as you can see from the chart, 2012 is following along very closely with the trends from 2011 and 2010. We would have expected a drop-off in June, as that is certainly what happened. When I bring in the year-over-year changes for each month, it is apparent that a trend is developing here. The year-over-year increase has been declining the past 4 months, and this month's number is less than 1% higher than June of 2011. This is definitely something to keep an eye on going forward, as if this trend continues next month, we could actually have milk production that is lower year over year than 2011. Milk per cow came in at 1,804 pounds for the month of June, and that number represents an increase of just 8 pounds from that of June of 2011. This is also following previous trends, as we would have expected to see a drop-off from May to June. Taking a look at the May number falling down into June, we can see that that happened this year and also 2010 and 2011, so no surprise there. Total cows on farm dropped for a second month in a row, coming in at 9.241 million head. This represents a decline of 19,000 head from May, and we have now lost 30,000 head since April. While the herd is still well above 9.2 million head, this shrinking trend could continue as it becomes more and more expensive to feed these animals. Looking ahead to next week, we will get to see if cheese continues to rally and whether or not it will drag milk up with it. Next week will also tell us if grain prices will continue their march higher. With corn prices right around $8, we feel the rally will either fizzle out here and head lower, or will spike higher in the short term. That will do it for us. On behalf of your Market 360 Advisory Team here at Stewart Peterson, thank you for watching and have a great weekend.